Hey, how's it going, everybody? Mikey here from Wall Street IO, the number one backtesting platform for stock and option traders, with a quick update for you now. We've obviously had a pretty big week to the downside. Apple and a lot of other stocks had a huge gap down again Friday. However, many of them actually recovered and filled the gaps. Apple at one point was actually up quite a little bit on Friday. You can see this last range of support that the stock was in got filled basically and recaptured in one day. So there's your support all the way to about 272. Apple actually closed at 273. So I actually think we have two over-under areas to review and look at for Apple. Current one basically is Friday's close right around 270 to 272. If this level around 270 and 272 here can hold as a support, I think we could actually move back up to at least 285 to 290. At the very best 300. At that point, I'd be looking for potentially a lower high. If it comes off Monday and we're a little bit more bearish, we gap down, we start to move below 270, we'll be looking at this level here around $256. I did a couple of tests earlier, and at these lows here for Apple, that was about a 21% decline. It's a pretty big decline. We've had, in the last 10 years, we've had three really big declines. One of them that was about 45%. This one, again, was about 35%. This one, I think, was over 30%. So with the current decline of 21% all the way to the low, that does represent a pretty significant pullback. As of right now, on this weekly chart, I calculated a 35% pullback in case it mirrored one of these longer ones that we've done, and that would bring the stock down to about $215 to $220. At that point, like let's say worst case scenario here, Apple does move into here. I think this would be one of those aggressive buy zones, again between let's say 210 and 220. That would be like the next couple weeks come off and we're super bearish, we continue to sell off. I think that would actually be a fairly decent place to re-engage Apple for a longer term position. But as of right now, we still have two levels to watch in the short term, right? We have the 255 level, which was the low of Friday, and we have the 272 level, 73 level, which was the close of Friday. So those are the two levels to watch initially. But again, we moved down really quickly in just a week. We went from above $300 all the way down to 256. So if we get another week like that, this would probably be the support range directly below us, which I believe would probably be a fairly decent place, again, to engage longer term stock if your time horizon was 1 to 4 years at least. A couple other things to consider with Apple right now when we take again a look at the weekly chart. You can see that the MACD has just now crossed to the bears on the weekly chart. If we do even compress in this range between, let's say, 250 and 300, it would probably take the MACD some time to unwind out of this. What that means basically is the shorter term swing trading will likely be a little bit choppier and potentially have more downside risk until this gets crossed back to the bulls, where then it'll become more bullish from a swing trading standpoint. Now, that being said, I did just say that, if it does come into this lower range between 210 and 220, I think it's a good long-term buy range. And that would be independent of this MACD turning. That's a long-term buy range with a time horizon, again, of like 1 to 4 years. Whereas if I was personally going to want to get really comfortable trading 1 to 2 weeks at a time, shorter term time horizon, I'd like to see the MACD kind of curl back up to the upside or see some more positive technical indicators short term for Apple, which we're not seeing right now. And it may be a little while before we do. I want to take a look at a couple other things as well. Let's take a look at the SPY. While the SPY on the daily, this may look super dramatic, it was actually a smaller decline than Apple had. The SPY from high to low dropped about 15.9%. Where it currently sits, obviously, is above that. You can see when you take a look at the SPY that we have basically landed below this level of support, right around $300. If we continue to bounce, I'd be looking at that area for a gravity point. Again, very similar to Apple. If we can hold this low from Friday, and even better, the close of Friday, and move to the upside, I would be looking for a fairly speedy bounce. However, as we approach this area, I'd be starting to look for a lower high. which then could potentially spin us into a sideways compression. If you think about the SPY on a longer term basis, it kind of doesn't feel too crazy to think that we could move into a compression phase inside of a range like this for a little while the market digested and repriced itself with earnings that are going to come out. So right now we probably have and are starting to have like what I would consider to be an overreaction. If we have another week of downside, that would probably be a longer term overreaction. However, the larger this reaction becomes, the longer it's going to take for us to digest or compress out of it. And one of the things that I'm going to be watching closely are corporate earnings, because a lot of companies are starting to guidance down a little bit, and we're going to need to see how well those earnings come out on this next round of earnings, and possibly even another 3 months after that. So this move and this whole coronavirus and everything that's happening around it and the impact on supply chain and whatnot may take 1 or 2 earning cycles to fully digest and reprice. And during that time, we're probably going to see some volatility and very likely the stock market move into a sideways corrective phase once it finds a bottom. So I think that's a pretty good analysis for this weekend. I hope it helped. Y'all stay safe out there. Watch the levels that I gave you. And on behalf of the entire Wall Street AO team, I wish you good trading and a good day.